Hello, this is Seth from Terry's Tips, and I am going to give you a little rundown of our services and what we send out to our paying subscribers each week. And we're in the first week of May, and I'm going to go over a few things from our May 5th Saturday report, which just came out. And we have three main strategies that we carry out in Terry's Tips. The first strategy is called the 10K strategy. The second strategy is called the bull put credit spread strategy. And our third strategy is the diagonal condor earning strategy. Now, I'm going to briefly touch on these three strategies, but we're going to go into a little more detail on our flagship strategy that we've been doing since 2001, which is the 10K strategy. This week the market was down just a little bit, but our portfolios had a fine week. And let's see, the big winner this week was our Wiley Wolf portfolio, which is based on the underlying of Facebook. And if you've followed any of our stuff, you know what a amazing year we had with that portfolio last year. It was up over 700%. But last week, our Wiley Wolf made 25.5% in just 1 week. Obviously, portfolios go up and down in value from week to week, but our goal is to keep that trend on the upside. The next portfolio we'll talk about briefly is the Galloping Turtle, which is comprised of bull put credit spreads, and there are different underlyings and different time periods. So we use these primarily from the options trading idea of the week, which our free newsletter subscribers get every Monday midday. And if we're following it as our paid subscribers do, maybe an auto trade, their portfolio would have gone up 24.4% in value this week. So, the whole portfolio is up as well for the existence of the portfolio quite a bit. And we can address that number a little farther below. Lastly, we have the diagonal condor earning strategy, which is something we've been developing this year and the end of last year, and it's been looking like a really solid strategy. Looks like it's going to be a nice winner that we'll be able to share with our subscribers. But you'll have more on that in future communications. I'm just going to go quickly through what a Saturday report entails, but it's a summary of all the stuff we have going on. And you also get the trading idea of the week a bit earlier than the free newsletter. So in case you want to put it on first thing Monday morning, here's all that information here. And then we have the underlyings last week, this week, the percentage change. We have our portfolio summary of all the portfolios. We have some overbought, oversold numbers. And then I'm just going to go all the way down to the end. This report is about 16 pages long. We send out each week, but we're going to get down to the very end and just show you we've got some humorous quotes and puns and things like that Terry likes to put in there. And then lastly, he has a little bit of a sharing of personal thoughts, opinions, and stuff going on here in Vermont and in his travels. Now we're going to dial in a little bit and look at one of the 10K portfolios, the Rising Tide portfolio. Now the Rising Tide portfolio is based on the underlying MasterCard. This portfolio was started in November of 2016, which doesn't sound like that long ago, but it's almost 2 years ago. All right. And let's see, it started out $5,000. In 2017, it made a gain of 152%, while MasterCard itself picked up 44%. We withdrew $7,615 from the portfolio and started over with $5,000 on the last day of 2017. So what that means is that anyone at the beginning of 2018 that started this portfolio and was in it the year before took their $7,600 and still had $5,000 that they started with to play. So all the money they're using was basically all profits, and even if they lost the entire $5,000, they still would have made over $2,600. Now, taking us into early March of 2018, the portfolio had doubled in value once again. So that we did a 2-for-1 split again, started over at $5,000. So subscribers who followed the portfolio from the beginning of this year and took out their original investment and started over entirely with profit. So even if they lost the entire $5,000, they would still have not lost any money. So that's one of the great benefits of these 10K strategy portfolios, is because of their nature, their leveraged positions, and you can make a lot of money. It's not to say you can't lose money, because you certainly can. If the stock turns against you, you can also lose quite a bit of money. And we'll address that a little bit down the road with what happened to Facebook this year when it dropped precipitously due to some of the political ongoings of the world. And anyhow, from here, rising tide, as this week was an unusual week, because the key to success for our 10K portfolios is that we want the stock to fluctuate as little as possible. We want to stay basically right in the sweet spot. That's where we make the most amount of money. This week, due to earnings, it went up over $12, which normally we wouldn't be able to handle very well. If we had done nothing, the portfolio would have lost a tremendous amount of money. However, Terry is very quick to make adjustments, and he really does not like to lose money, and he will do a lot of adjustments on the portfolios to keep us in the sweet spot. And let's slide down here a bit to the risk profile graph and the summary for the week. And so the portfolio gain made $372, which was 8.6%. So we're actually tremendously happy with that this week. Normally we would have lost money with the stock move this much, but Terry knows how to make adjustments, and there's some details on that here. And we get into how to make adjustments, which is the real magic of counter and diagonal spreads, is being able to tweak the risk profile as the underlyings move up and down throughout the weeks. Next week, if we look at what's coming up, the stock is at 188 roughly right now, and if it stays right there, looks like we're going to make about just under $200 based on theta in this next 5 days. Now, if it goes down a little bit, or let's say it goes down to, let's say it drops $3, well, we're going to make $138. If it goes up $3, it's going to get a little bit past the break-even range, and you're going to lose $2. So our ideal is if it doesn't move much, and we'll make money in the sweet spot right here. And again, we'll make adjustments if it starts going up too high or down too low to keep us in that area. So that's the quick summary of our Saturday report and 10K strategy portfolio called the Rising Tide, which I'm highlighting here today. In the communication you've received this video in, there is an offer that if you like the stuff you hear, I would recommend taking advantage. It's one of our lowest prices ever, and you really can get on board, check it out for under $40. I mean, that's and we paid more in commissions on a lot of our trades than than what the service cost for a couple months. So take a look. If you have any questions, you can reach me at Seth@terrystips.com, and we're here week in, week out. So let me know your questions, and if you don't have any, take action now, sign up, and we'll see you on board.